What's up, YouTube? My name is Ty, financial professional. Welcome to my channel. Please like the video, please subscribe, and catch me every weekday after market close on the Smarter Gambling Show. So here is NVDA, Nvidia. This finishes at $179 today. That is up 4.01%. So we haven't talked about this stock in a while. Last time we talked about it was a couple months ago during the last earnings. So yesterday in the aftermarket, Nvidia released the earnings and the price action has been absolutely crazy. So let's check out the earnings real quick. So EPS was 51 cents, which was a huge miss from the estimate of $1.26, and revenue was $6.7 billion, which was also a huge miss from the estimate of $8.1 billion. So really bad earnings there. And the guidance for Q3 is $5.9 billion, which is way under the estimate of $6.95 billion. So yeah, all around, pretty terrible. So the stock did sell off quite a bit in the aftermarket yesterday. But today, for absolutely no reason, this stock mooned to the upside. But hey, that's how it goes during earnings, especially nowadays in this market. You can have good earnings, the stock moons. You can have bad earnings, the stock moons. You can have good earnings, the stock tanks. So you can have bad earnings, the stock tanks. So in this case, terrible earnings and the stock is mooning. But I don't think anyone is complaining about this. So in addition to the earnings, the company still has $12 billion to buy back in stock. So that's bullish. And we are getting a bunch of price adjustments today from the hedge funds. So let's check that out. Craig Hallam adjusted to 165, Deutsche Bank 165, Truist 198, Goldman Sachs 162, BMO Capital 230, Mizuho 225, Baird 135, Citi 248, Benchmark 215, Barclays 190, JP Morgan 220, Wedbush 160, and Raymond James 210. So on the higher end, we have Citi at 248, and on the lower end, we have Baird at 135. So a pretty wide range of price targets there, but for the most part, it seems like the hedge funds are bullish on this stock. So that's another reason as to why this stock may have mooned today. A lot of institutional money coming in here. Just speculation though. This was number 5 on StockTwits today. Had 4,500 mentions. So once again, we're going to analyze it. All right, let's jump right in. Let's go ahead and analyze here. So first of all, this is a cup and handle in the making. Bottom of the cup being the low of 140. And there can be multiple possible tops. It can be 194, 196, 205, 229, or 291. And longer term, this is part of an even bigger cup and handle where this has the potential to come all the way back up to the high of 346. Although I do believe the most realistic tops would be 194 or 196. But those are all bullish indicators that is telling us that the stock should come back up to one of those tops to complete the cup. Down here on the MACD, the moving average convergence divergence, the MACD line looks like it's about to cross the signal line very soon. So that is a bullish indicator that is telling us that it may be time to buy. And right now we have a double/triple bottom forming. Here's the first bottom, here's the second bottom, and today at the low was the third bottom. So that's a bullish indicator that is telling us that the stock may be due for a breakout to the upside. And then we have a double gap down. First gap down was back at 230. So that's a bullish indicator that is telling us that the stock should come back up to 230 to fill that gap. And the second gap down was back at 258. So another bullish indicator that is telling us that the stock should come back up to 258 to fill that gap. And it may take a while for those gaps to fill, but eventually in the longer term they should. And now for the bearish stuff. So we do have a gap up back at 158. So that's a bearish indicator that is telling us that the stock may come back down to 158 to fill that gap. Here we have a bear flag forming. Here's the flagpole and here's the flag. So that's a bearish indicator that is suggesting that the stock may break out to the downside. And right now this appears like it is barcoding between 192 and 167. So right now the barcode is a neutral indicator. But if this breaks 192 to the upside, that would be bullish. And if this breaks 167 to the downside, that would be bearish. RSI is currently at 51, so that is extremely average. According to the RSI, the current price of 179 is right around fair market value. So the RSI is currently a neutral indicator. And if you guys want to follow along, the link to the chart is in the description down below. So right now, this is trading between the sideways channel, the rectangle of 181 and 178. So if this goes to the upside, next levels of resistance would be 181, 183, 185, 187, 190, 192, 194, 196, 198, 200, 203, 205, 209, 210, 212, 214, 217, 219, and then 222. There is resistance above 222, but we're not going to discuss that right now. And if this goes to the downside, next levels of support would be 178, 177, 175, 173, 171, 169, 167, 165, 162, 160, 159, 156, 154, 152, 150, 148, 145, and then the low of 141. There is support below 141, but we're not going to discuss that right now. So right now at the current price, 179, the channels to the upside and the downside are pretty decently sized, so expect a regular amount of price action either way this goes. However, if/when this breaks 148 to the downside, the channels start to open up and get really wide. So expect a significant increase in price action if/when this breaks 148 to the downside. And this did 77 million in volume today, so very significant volume, way above the average of 44 million. So this pump today was confirmed by the volume. Okay guys, just my opinion, not financial advice. So once again, this has been some insane price action in the past day, about a 10% swing, which does not happen with blue chip value stocks like Nvidia. So not really sure why the stock has been trading like this, but again, it does seem like the hedge funds buying the dip here would be the biggest factor. So this is Nvidia, blue chip value stock, not going anywhere. It'll have its day again. It's long-term bullish. Again, we have some strong long-term bullish indicators in the cup and handle and double gap down. However, in the short term, this looks like there may be a decent amount of downside to go here. Again, we have some strong short-term bearish indicators in the gap up and bear flag. So therefore, if you want to go long, not financial advice, the current price of 179 is a pretty decent entry, very average entry here according to the RSI. You missed a really good entry today, but this is still a pretty good entry. Again, in the longer term, this should eventually come back up to 258 to fill the gap there, and from the current price of 179, that would be about a 45% upside potential. So a pretty good amount of upside potential here in the longer term. And again, this should eventually come back down to 158 to fill the gap there in the short term. So from the current price of 179, that would be a little over a 10% downside potential. So I would say going along at the current price, 179 would be a low risk, high reward play. Definitely worth a shot in my opinion. Again, pretty good upside potential in the longer term and really shouldn't go too much further to the downside. So you can't go too wrong buying in at 179. But honestly, if you're a bit patient, there's a good chance this does come back down to 158 to fill the gap, and I think that would be an excellent entry, much better than the current entry of 179. So from 158 where the gap is up to 258 where the other gap is, that would be about a 65% upside potential. So I would say going along at 158 would also be a low risk, high reward play, but entering at 158 still is much better than entering at 179. So either way, if you decide to enter now or hold off for a better entry, longer term, it should pay off pretty big. So I can't support going long at the current price, 179 and lower. And if it pulls back, then you can just average down at these supports that I mentioned before. Now, if you want to go short, not financial advice, I would not do that, and I would not recommend that. It's not necessarily a bad play. You can make some money here on the downside. It's just a little too risky for my liking. Again, long term, this looks really bullish. This should eventually come back up to 258 to fill the gap there, which again would be about a 45% upside potential. And again, this should come back down to 158 to fill the gap there in the short term, which would be about a 10% downside potential. So I would say going short at the current price, 179 would be a high risk, low reward play. Not really worth it in my opinion. You'd be shorting for not too much money on the downside and exposing yourself to a lot of upside risk. So I don't like the current entry of 179 on the short side. So if you want to go short, please do that at your own risk, and it would definitely have to be for a quick scalp. Get in, get your money, get out. But there are definitely way better short plays out there in the market, and you can probably find one much better than Nvidia right now. I will say though, if/when this does come back up to 258, then I think that would be a pretty good time to short this down. Probably not going to be for a while though, but just be aware of that, guys. So congratulations to everyone who made money in the stock today, and good luck to everyone currently in the stock and to everyone looking to take a position. This is NVDA, Nvidia. Thanks everyone for watching today. I appreciate you guys. Please like the video, please subscribe, and catch me every weekday after market close on the Smarter Gambling Show. You apes already know, diamond hands to the moon. I'm Ty. This is Smarter Gambling. See you guys tomorrow. Peace out.